Welcome, my name is Rick Petticelli of Morpheus Trading Group, and in this video we're going to cover the technical action of the broad market averages and give our short-term outlook on the market. Let's get to the charts. First up is the NASDAQ Composite. Prior to December, there was a very strong uptrend in place. We would classify very strong as anything that's where the price is holding above a rising 10-day moving average when the 10 is above the 20. The recent two-day shakeout, which was pretty sharp, undercut the prior low, but did manage to close at the 20-day EMA, which we believe leaves the door open for a potential recovery back to new highs within a few days, although the odds definitely favor the NASDAQ Composite just chopping around for a week or two above the 20-day EMA to digest recent gains. For our style of trading, we don't really look to predict market action, we simply react to it. So while we are looking for the NASDAQ to hold above the 20-day EMA here, given the price action of the past two sessions, it would be disappointing if the NASDAQ were to break down beneath the 12.3 low, as that would increase the odds of a deeper pullback to the 50-day moving average. If the NASDAQ can hold above the 20-day EMA and chop around, we will remain focused on the long side. The same goes for the S&P 500 as it reclaimed the 20-day EMA. There was a deeper pullback here, breaking the 20 EMA on Tuesday, so it might have a bit more overhead to work through, so maybe better odds that it's going to chop around for a week or two before it can even attempt to move higher. And also, if you look at the weekly chart here to the right, last week was the first week where the price action took out the lows of the prior week. So when this happens, usually tends to lead to some corrective price action, and the 10-week moving average is catching up. So a few weeks of chop would allow the 10-week MA to catch up. And let's revert back to the complex chart. It's further away from the 10-day MA than the SPY. We have pretty much the same setup here in that if the price action chops around for a few weeks here, that will allow the 10-week MA to catch up. And that would be the first touch of the 10-week MA after a breakout, which is generally a big support level. On to the iShares Mid-Cap Growth Index, IWP. And we use this index a lot to give us a better idea of what mid-cap growth is doing. And as you can see here, there was a breakout to new highs. It pulled back in sharply here the past 2 days, much like the other indices. But it did hold above the 20. And we'll have to see how it holds up over the next week or two, but we're looking for the price to hold above the 20-day EMA as it digests the last move up. And IWM is the last broad market chart that we'll look at here. And as you see, there was a breakout above the prior range high, 2-bar pullback, and the price closed well above the 20-day EMA on Tuesday, and now back above the 10-day MA on Wednesday. So in the short term, IWM is showing a bit of relative strength in that it's back above the rising 9-day MA. And that does leave the door open for a move to new highs as well. It may not just shop around for a week or two. When assessing the health of the market, although the broad market averages are important, it really does help to take a look underneath the hood and see what's going on in terms of sectors. And if you want to drill down even more, you can go into stocks. But for this video, we'll take a look at a few sectors, and what we want to see are sector ETFs that are breaking out, moving to new highs, that are leading the market higher. And earlier, when the market first started to rally, it was construction that was leading the charge as it broke out in September and had a nice run up. Since then, money has flowed out of construction and into biotech, which has zoomed higher here the past few weeks. IBB is up since taking out the 200-day moving average, up about 12% here, which is a strong move for an ETF. That would probably be like a 20 or 30% move in the stock. We also have pharmaceuticals helping out. XLV, the healthcare sector ETF, strong move. Then we have technology, it's broken out to highs. Even the financial sector broken out, medical devices just starting to break out, and gold continues to struggle as after losing the 50-day moving average and prior lows here. And it's now having to deal with the declining 50 MA, so there's really looks to be no money flowing into gold or silver right now, uh, nor is there much going on in oil. So there are clearly enough ETFs that are moving to new highs, which is what we want to see. And with there being so much strength in several sector ETFs, that tells us that the 2-day pullback in the market was more of a shakeout and not the beginning of a deeper correction. And again, that's just us looking at what's in front of us, what we're seeing here. We're not making any predictions. We're just noting that the market has enough leadership to overcome short-term distribution, and after a slight pause, the uptrend should be able to resume. And more than likely, while the market pauses, we'll have some groups, some specific industry groups that continue to push higher and ignore any kind of sideways action in the market. Well, thank you for joining us. And if you'd like to learn more about our style of trading and how we analyze the market, head on over to our blog at morpheustrading.com/blog. We have over 10 years worth of articles on our trading system, how we enter, how we exit, how we set stops. And if you have any questions about this video, you can send me an email at rick@morpheustrading.com.